So hello, everybody, and happy to have you still with us. I'm going to present today's panel. My name is Luz Parrondo. I'm a professor at UPF, Barcelona School of Management, but I'm not going to be talking to you guys today. I'm introducing our panel, which I think is quite interesting panel. We have Candace Kelly is a general counsel at Estela Development Foundation from San Francisco. Very sunny, I think. It looks sunny, at least from here. Then we have Álvaro Suárez, a DLT lab technical lead at BME, is the stock market in Spain, for those that don't know. And Scott King, a blockchain product owner at ING. So welcome all you three, and thank you for being here. So the first thing I'm going to ask is that you introduce yourself a little bit more, and then we'll step up on, I think first a very short introduction on yourselves, and then I think we will go ahead on your companies and what do they do in the cryptosphere, which is the future of finance, digital assets, and beyond, which is the panel that it takes us today. So Candace, it's very difficult for me. Can you repeat your name for me?
Candace.
Candace. So
yes.
Tell us about
thank you. Thank you so much. I'm really very happy to be here with this great panel. And yes, as Luz said, I'm calling in from San Francisco, where it's morning time. So I am the general counsel at the Stellar Development Foundation, and we are a nonprofit organization, and we're seeking to create equitable access to the global financial system through our support of the Stellar Network. So we can get into exactly what we do and how we think about it a little bit later, but just my background, I was a federal prosecutor for over 15 years here in the United States, and joined the private sector because I was seeing that there was a lack of knowledge transfer and trust between the private sector and the public sector. And I felt like the only way to really break through that was to have people like me, who had spent my entire career in the federal government, spend some more time in the private sector. And so that's really, the crypto space is a perfect place for me to be, because I think there is a knowledge and trust gap that we really need to work harder to close that divide. And so that's a little bit about me.
That was very interesting. That sounds great, the federal prosecutor. So Álvaro, just in order that I have.
Hi, everyone. I'm Álvaro Suárez. I'm a computer engineer and project manager with more than 14 years experience in software development and multiple sectors. I work for BME, the company that operates the stock market in Spain. And I'm the DLT lab technical lead. I first learned about Bitcoin, Ethereum, and blockchain back in 2016, and I was very excited. I went immediately deep down the rabbit hole, as we usually say. Back then I wasn't working in blockchain, but then in 2018 I decided to go all in the technology, and I joined the BME. Excited about the development in finance and what the technology can do in our sector. And our laboratory was created in 2017, the DLT lab, the laboratory focusing DLT technology. And the main goal was to study the technology and analyze the implications in our core business. That basically is what blockchain is about, right? Transaction and value transfer. So yeah, very excited.
Thank you, Álvaro. So Scott.
Thanks, Luz. Really happy to be here today. My name is Scott. I work as a product manager and initiative lead at ING within the DLT team there. Specifically, I actually head up one project that we're working on, which is around data privacy on blockchain. So we look specifically, we're building out specifically a product using zero knowledge proofs to kind of achieve privacy in transactions on one of the platforms we use most from a DLT perspective.
Great. So my first question is to Candace. Well, the Stellar Development Foundation's mission is tied to financial access and inclusion. And can you share more about why that is important as an important focus, and how digital assets can facilitate that, and how Stellar Foundation is, helping to facilitate that?
Sure. Well, I'll start with why that's really important. And we at the Stellar Development Foundation believe that financial access should be a right and not a privilege. And we are seeing, 1.7 billion adults in the world don't have a bank account, and that's not to mention millions of others who have limited access or restricted access to the financial system. And with a $500 billion a year remittance market, that is just a recipe for lack of economic opportunity, not just for individuals, but for full communities and regions of the world. And so we think that transactions and financial and payments are really the key to that process, because being able to make transactions efficiently and safely, it helps people to have access to business and education, and also to manage unexpected disruptions in their income. So if you lose, if you become unemployed unexpectedly, or a breadwinner loses their job, being able to manage through that and have access to savings and insurance and all sorts of stabilizing financial services. And so, and we think that it can actually prevent people from falling into poverty in the first place if they have access. So that is really the kind of the why, and how Stellar and the Stellar network and community are really working to address this is that the current financial system, the reason there are these issues with access, we think, is one, there's a huge de-risking issue, which is that the big financial institutions are getting more and more controls put on them. And so it's easy to just cut out full swaths of people and sectors of the economy that serve those people. And then on a more individual level, the folks who do have access, it's very slow, it's very costly to send transactions, particularly cross-border payments. And that's what the Stellar network is really optimized for. So with using the Stellar network and at a very high level, you can issue any asset on the Stellar network with a couple lines of code. It's not a smart contract-based system. It's very simple. And what we are developing is a network of anchors. And so these are they're regulated institutions that are at the edges of the network, the on and off ramps between the Stellar blockchain network and the traditional payment rails. So we're trying to work within and sort of improve upon the existing financial system, as opposed to trying to supplant it. And those anchors will issue fiat-backed stablecoins, and then users can transmit on the network, either peer-to-peer or through a virtual asset service provider. And we have a built-in decentralized exchange. And so those stablecoins can go from one country to and be converted into the recipient's home country stablecoin, and then convert it back out into fiat. And all of that takes 3 to 5 seconds on the network. And the transaction fees are negligible. They're really there just to protect against spam and DDoS attacks, and they're burned. They're not for profit. We're a nonprofit organization, and we don't control or run the network. That is all built into the protocol. And so, removing the friction from the traditional system that is in place is really kind of the goal of the network. So I've said a lot. I will stop there, and if there are questions, or we can move on, or I can answer questions if there are more specific questions about how it works or how we think that that's helping to address the issues of financial inclusion.
Thank you very much. I see that the audience is already stepping up and asking. Like, being a lawyer myself, says, after working in civil service before, I love to see CBDC changing careers into NGOs, participation in financial services is so important. So they are somehow congratulating, I think, your move and how that, and I think what you're doing, not only you yourself, but your companies that are something that humanity or we need at the end is this connection that I think was missing, and we really appreciate for that. And I'm thinking that there are going to be somebody, thank you, that would mean somebody, that would mean there were going to be a lot of questions, I hope, because you are saying, at least to me, it raises questions about this, what you say, non-fees. We will come back to that, but these negligible fees that you're having, that you're burning them, that you have no profits. I have my own questions, but I'll let the audience if they ask you later. So Alvaro, what are the digital assets initiatives that are you developing at the BME? So what is the BME doing? What are the initiatives? What we will see, I would think. I don't know if we will see it in a short time or in a long time. You tell us. So what is ahead? What is ahead of us? It's just tell us a secret if you can.
So in our laboratory, we usually classify all the projects that we have. We have multiple projects, and we have three different verticals. The first one is tokenization and digital assets, and then we have process digitalization and new business models, or a project that don't fit in one of the two first verticals. And if I focus in the first vertical, tokenization and digital assets, we have two different projects right now. One of the projects is focusing the tokenization of traditional assets. Also, based on the MiCA proposal, it's also named as an asset reference token, right? Or it's basically a security token. And then we have a second project that is focusing issuance of pure native digital assets. So it's not backed by another, there is no underlying asset, right? The first project that we also name it as the digital bond consists in the tokenization of a traditional bond, and that is issued in the legacy system, right? And once it is tokenized, we manage the full life cycle in the DLT platform, from the issuance to distribution to the coupon payment, redemption, everything, right? And this project, the main goal of this project, the first one was to show the benefits of the technology in the stock market. Also validate the compatibility of DLT with the current regulation. And also, since we are the company that operates the stock market, we wanted to lead a new model that serves as a standard for regulated markets. And we are expecting some benefits from this technology, from settlement risk elimination, and this is because of the transaction atomicity, and also prove that this can be an efficient mechanism for continuous alignment between the central registry and the detailed registry. And I don't know if the audience is familiar with how our system works, but in Spain we have a two-level registry. We have a central registry that is what the CSD or BME have. And then there is the detailed registry for the final investor that is kept by the custodians, the banks and financial entities. And also we are expecting cost reductions because of the process digitalization and automation. And then our second project that is focusing native digital assets is a financing platform for SMEs, small and medium enterprises, where investors can buy security tokens and receive interest from these tokens. So this platform allows issuing companies and investment services companies to have a simple way to manage their issuances in a uniform, secure, and efficient way. What is the problem with the current system? Well, this type of investment is usually very opaque and very liquid, this type of investment instruments. And by using this platform, what we expect is to create a more transparent, liquid, and attractive ecosystem for everyone, right? Investor and these small and medium-sized companies. And right now we are it's not in production, but we are using two different investment instruments that participate in loans and convertible loans that are what investors are interested in. But basically what we want to do is to build a marketplace that is flexible enough, so in the future we can use it to issue basically any type of token, from collectibles to securities to utilities or to NFTs that are very en vogue right now.
Sorry, my muting. Very interesting. I have so many questions. There are some of the questions here. One says, all those projects that you mentioned being developed in-house?
Yeah.
Okay. And
we also we are working along with other companies and entities. I can not give names right now.
Not say. You cannot say. Okay. So basically, these two projects that you say is one which is asset referenced, but all of them are securities. All both projects are securities in this place. One is asset reference and the other one is native. And right. One is just because you find, and this is what, like, for instance, my students, I have a lot of students that are doing a lot of work. My undergrad and postgraduate students are all analyzing what are the benefits of blockchain in the stock market. And so the study that you have made has already revealed that the main benefits, and that's what I take from your saying, is that it's reducing the settlement risk and also reducing cost and friction.
Right.
In one side, and the other side is making more transparent and liquid the financing on the second one. Apart
from the same benefits that you can have in the
so all these benefits, you have them, all these benefits, you have them in both of the projects.
Right.
Okay. But you see, because we always understand, I mean, I've read many times this thing about liquidity, how this makes it much more liquid. So you have proved that, and you have seen that liquidity increasing actually. Something is real.
It's not that necessarily because you build something on blockchain is going to be more liquid.
That's my question.
But by making it more transparent and easy to use for users, what we are expecting is that we will have more investors, more issuances, and at the end of the day, that is more liquidity, more volume, and at the end of the day, is cost reduction. That is what everyone wants.
So the liquidity increase comes more for the volume, not so much because you fraction it.
Yeah. Well, if you fraction it, what you is that investor can invest less money, so that you can attract more investors.
So also that is a reason.
Yeah.
Okay. Thank you very much, Alvaro. I'm jumping to Scott and see what. How is ING working on the digital assets space, and what is the view that ING has on it? So a little bit on your company's relation to digital assets or financial assets.
Sure. Yeah, well, I think like a lot of companies within ING, we're definitely seeing increasing opportunities when it comes to digital assets, kind of in the spaces of asset-backed, but also native security tokens. But obviously, we do have to kind of consider regulation as well, quite a lot when we think about these sort of things. But I think one example that I can give of a project that we work on in the space is Finality. So ING is part of Finality Group, which some listening may know of already, but it's a group of 15 participating banks, ING being one of those. And really what Finality is looking to do is to build out a multi-currency payments platform for DLT to be used to settle international money transfers instantly. So in doing so, there will be creation of tokenized versions of 5 of the major currencies, fiat backed, one to one. And really the goals of that are, well, the kind of advantages that we see that come out of that are the reduction in intermediaries in the process, the enablement of instant 24/7 execution of those payments. And really on a higher level, it's reducing time, reducing cost, and reducing risk. I think some of them you already mentioned, counterparty and settlement risk. Yeah.
I forget I mute. So, but the reduction of the risk, you say, is both counterparty and, sorry, you said counterparty and
settlement.
And settlement risk. Why can you go a little bit deeper? Why in counterparty risk is being reduced?
Yeah, well, I mean, it's a project of ING which I don't work on myself completely, but I think what we see is that that there is a discrepancy between transactions and then the settlement of the funds that go with that. So really, we're trying to reduce risk that doesn't get fulfilled, basically.
So it's mainly because, again, you increase transparency and less disagreements or less mistakes or less like mismatching. So you just by matching it everything and very all clear and make it like real time, increasing all that, it just makes less counterparty risk just by the fact that it's better performed.
Exactly.
In somehow.
Yeah.
I understand. Sorry, there was one missing question for Alvaro that I just missed, that it says, this second project you are working on, does it mean that if I am a very small company, that somebody is already, a potential customer of yours? So it says, if I'm a very small company, say 1 million revenue, will I be able to issue new shares and raise money with the second project that you mentioned?
Yeah. So we haven't decided what will be the minimum amount that you are trying to raise. But yeah, we are focusing in small, even startups, small and medium enterprises, because big companies, they already have the stock market, right? Yeah. So what we are trying to do is to reach those small and medium companies that for them is harder every day to get funding from the banking system sometimes, and so they need to go to alternatives, and so those are the type of companies that we are focusing on.
Thank you. Then going back to Candace, so to make an impact and to move the ball forward to the greater financial access that you were mentioning before, adoption of digital assets is a big factor. So how is Stellar, to simplify, thinking about driving adoption of a Stellar technology? So adoption, how is it? And then after, I will go back to a question of the audience. But before, tell me, how is Stellar planning that?
Sure. So I think that there's adoption at various different levels. And first and foremost, I think our overarching kind of outlook is that we want to focus on solving problems for people and businesses in a user-friendly way. And I think that unfortunately there are some crypto projects out there that maybe don't, it seems very simple to say that and to think that way, but some of them are not necessarily like really just thinking about the usability, both from the user perspective as well as from the developer perspective. So another key element of how we operate is that we're open source. And so we think that operating in the open breeds transparency and trust. And I'm not an engineer, but I can tell you that in my time at the foundation, the number of times that we have been complimented on our documentation and how easy it is to understand this technology, because I think, again, back to my kind of original reason for even coming into this space, that knowledge and trust gap is something that's really important in driving adoption, again, at all levels, both at the developer and the businesses building on Stellar, and then their ultimate users. We don't interact with consumers and users as the protocol, the sort of shepherd of the protocol code. So I think those are a couple of things, and we do have a subsidiary that is working on a self-hosted wallet, and those are sort of their driving, their guiding lights, right? Is making sure that they are solving a problem, and it doesn't even matter if the end user really understands but blockchain technology, as long as it is helping them solve a problem and it's doing it safely and efficiently. So those are some of our kind of guiding principles. I think other work that we do at the foundation that's trying to move the ball forward is the time that we spend educating and interacting with and working with regulators and policymakers, again, to bridge that gap and to make sure that as policies and regulations are developed, they're done with the understanding of what is the technology, what is the actual threat of this new technology, these new cryptocurrencies, and how do we address that, and do that in a way that you're balancing the need for inclusion and creating economic opportunity. And then finally, we, both with our anchors, we have grants that we support and help on both some financially and some just on a technical level of helping them integrate into the network. And then we separately have an enterprise fund where we see businesses that can bring value to growth and development of the network. And we look for companies to invest in and to help integrate that have that reach, right? We are a small organization and located in San Francisco. And so making sure that we are leveraging the folks on the ground in various countries who have the local knowledge of both the regulations, the population, and the needs, I think is part of our secret sauce of how we're going to get, not be the American company going into an African nation and thinking that we know how to solve their issues. It's finding the right partners and supporting them in building on the network.
I like this last sentence that you just, you are local, let's say, you try to help where you know that you can help and where you somehow master. There was this question that you're trying to bring this inclusion, and we were saying, how would you do that with education, not only financial inclusion, but also social inclusion, which I think you have already answered right now very much. So you also, your time talking about knowledge and trust gap. So it's not only about trust, it's also about knowledge. And I think educating everybody, I mean, regulators, but also users, I mean, is somehow making a bridge between everybody so we can understand this much better, and then we can trust it, and then we can all benefit from it. I think you are somehow working on that. That's what
yes.
At least that's what I listen from you.
Yes, we are. And the one, and the marketing folks will be upset with me that I had to add this on because I didn't put that in my first answer. But we also have a very strong marketing team. And as a foundation that we're just supporting, we're really focused on the network and the protocol. But the marketing team partners with some of these institutions and anchors and others to highlight what they're doing, and to help them to get the word out, to get the education out, because it is, the most important thing is making sure that people understand. There are a lot of, if you think of it from a user perspective, like understanding and managing private keys, for example, it's not in your common, that's not something that you might have like a safety deposit key that you go to a bank, but it's not the same as having to really understand the power of this key and the ways that you need to protect it. And so spending time and making sure that when we're working with the various people in the ever-growing Stellar ecosystem, that everyone is really focused on that. And I think that because of our mission, and I think we attract organizations and individuals and developers who really care about those issues, and the education, again, at all levels, from the businesses to the developers to the regulators to the end users, is critical to adoption of this new technology, so they understand how it can really solve the problems, right? It's all you want to do is push a button and have it work. You don't need to understand, but know that you have the ability to dive deeper into it, and everything we have is out there and in the open for people to ask questions, to analyze, to audit.
My next question is another question for you, but I will ask it later because I will jump to Alvaro. One first question, it says from the audience, why all the tests being carried out on top of blockchain by financial institutions or financial intermediaries involve debt instruments and not equity instruments? Did you get the question?
Yeah.
All the tests, yes, is often you're often being asked that.
I understood. I cannot talk for everyone and everyone that is testing the technology. In our case, our initiatives are focusing in depth because they are simple products, right? And for proof of concept pilots, it's just easier to build something simple. And we in our marketplace, this financing platform, we already have in our roadmap the possibility to add also equities. But when you have investor with participation my background is technical, so I'm not a legal expert, but what I understand is when you have an investor with participation in companies, is way more complex than everything that you have to do with them. So for now, we just focusing very simple instrument to start with.
So this is going to be for you three, the challenges, because there is some questions on the audience also for you guys. I had it prepared for Alvaro, but it's going to be for you three. And I think Scott should be the first one. What are the greatest challenges or the obstacles that you find? What are the biggest obstacles that you're finding? And if you want to be concrete, so who is putting, I don't know how to say it in English, but in Spanish is how is putting all the wood under your wheels, no? So that your wheels will not move.
So you mean the greatest challenges in digital assets? Yeah.
But specifically, well, you find in the ING, I mean, in your companies, of course.
Yeah, of course. Well, yeah, I think one of the issues that we see is a massive topic and a massive challenge in the space is that of privacy. This is obviously kind of the angle that I probably work in most in my role. And I think, obvious to say, but within financial institutions that we do have to, it is imperative that we adhere to, compliance and regulation and things like that. And I think privacy is something that people generally think of public networks when they think about privacy. They don't think too much about permission networks. Within ING, we work with permission networks on the projects we work on. But privacy is still an issue that you see in permission networks as well. So when you think on a consensus level, for example, the validators, or even if you're thinking of some kind of application, trading application, where you have the idea of backchain or transaction history, which follows an asset as well. So this is something that we are actively looking at the moment. We're working on a project to address this currently, and we're basically looking at how we can, because there's different ways that can be achieved. You can go down cryptographic solutions, for example. You can also go down more hardware-based solutions. But within ING, at least, we look to tackle that really using cryptographic solutions. So what we're building at the moment is a product using zero knowledge proof cryptography. And the idea there is really that we will offer transaction verification and fully private transactions using zero knowledge proof, so that actually the contents of a transaction can be validated without any parties having to, apart from the participating parties, actually having to see that transaction. The historical transactions, you can still prove provenance without actually having to kind of disclose those details. So that's what I would say anyway for my role that we see as one of the key challenges and how we look to.
When you mentioned zero knowledge proof, sorry about that, I'm from not a technical person. I always think of this promise of the sovereign identity, when they explain to you, is like you accessing the casino and you don't have to say which age you are, you just have to prove you're over age and that's it. So this zero knowledge proof, does it has to be linked to sovereign identity? So when I have to, in your case, when you talk about privacy, you are not talking about identifying a person, because you're not doing that at any moment, aren't you?
Yeah, exactly. So I think the area that you're speaking of is kind of the area of verifiable credentials and things like that, which I think zero knowledge proof is also very linked to, as you say, proving certain facts about identity and aspects like that. But yeah, no, we and there's obviously real value in that as well. But we really look at this from the context of transaction verification. But actually, yeah, your question, is it tied to identity? I would say. Yeah, not specifically. It's not. Zero knowledge proofs can also be used out of the context of distributed ledger technology, even to be honest. But
would you need it? I mean, if you have that sovereign identity, would you use it in the bank? I mean, our citizens, we will identify ourselves using that type of identity with you, for instance, at some point.
Yeah, I mean, when we go into identity, that makes it a larger conversation, I think, as well. So we're not. It's not that for the project we don't really kind of delve into that space so much. But yeah, particularly we look at it where we can use it to actually make transactions more private for end customers and to allow them to actually only the parties that need to see details are the ones that actually see them.
I understand. So the same question runs for Kant is, and this was for the audience, what are the main obstacles to the mission of a stellar development convention? And here was not the word challenge, but obstacles. So I think it's a bit different.
Yes, I think it is a bit different. I think I would say that regulatory uncertainty is probably the biggest obstacle. Because if someone wants to decide to build and engage in these types of activities, they want to have a certain level of certainty as to what a regulatory landscape is going to look like. And we've seen regulators who are more focused on, they're not balancing that risk, kind of the anti-money laundering, countering terrorist financing, which are very important. I spent a lot of my life, utilizing the tools of that as a federal prosecutor, but balancing that with allowing innovation to happen, allowing economic opportunities and financial inclusion. And so I think, to me, making sure that there is that regulations are really being driven by, they're data driven and they're threat based, and they understand what is it that this technology can and can't do? What is it facilitating or not facilitating? And how do we create rational regulations? I think a really good example of this is the situation in Nigeria. So we have an anchor there, and there was a very active corridor for Europe to Nigeria payments. This was mostly the B2B, but in Nigeria, the Naira is not really regularly traded on a lot of the centralized exchanges. So it was solving a lot of problems. And there was a pretty robust corridor. And then earlier this year, the Central Bank of Nigeria, I think in response to some of the uprisings and some of the folks who were kind of anti-government, there were talks of them using Bitcoin, just came out and said, essentially, it wasn't exactly this clear, but essentially, banks can't deal with companies that engage in crypto. And so what's encouraging is that the central bank and the SEC are now engaging in a conversation and engaging in research and engaging in talking to the private sector and really understanding these questions, right? But I think those knee-jerk reactions of there's a threat, there's a problem, there's an anecdote, there's a fear, and making rash decisions without really understanding not only also the benefits. There's so many benefits. As Scott was just talking about, the ledger, the transaction history, it's all right there. The transparency should be increasing trust and not increasing fear and risk. And so I think those are the challenges that we see. And because every country is operating slightly differently, it makes it a little challenging to keep up with everything and to support folks.
Have you seen like a bit of improvement on this side? Like I think I perceive some improvement on how regulation are looking at these cryptos, like with less fear, like in the last maybe year or something like that. Have you seen that?
Yes, I definitely do. And I think that the conversations that I'm having are not the 101 level. They're at a higher level. People are understanding it better. And I think the other really encouraging thing, again, because of our mission, is that you see the new Biden administration, the new Secretary of Treasury here in the United States, focusing on that balance that I keep talking about between making sure you're addressing the risk, but also seeing how that might affect financial inclusion. And FATF as well has come out and started a project to look into and address these things. So I think that, to me, that's really encouraging that folks both are understanding the technology and not having as much fear of the space, and two, not just looking from one angle, which is let's address this risk that we don't totally understand, but there's a balance here, just like there is with any kind of regulations, whether it's national security and civil liberties. There's always that balance, and I feel like it's coming back into more equilibrium, and that there's more engagement with the private sector. So all of those things to me are very encouraging.
I've seen an improvement too. So now, Alvaro, your challenge also. So what are the big obstacles that you are finding in BME, and in this specifically these two projects maybe that you are developing? What are the challenges maybe for adoption or maybe for making it on the next step?
So from the technical point of view, apart from privacy that Scott mentioned, one that is very obvious is scalability. Like in finance and the stock market, we handle hundreds of thousands or even millions of transactions per second. And today we cannot achieve those throughputs using the blockchain technology. So there are many developments around second layer solutions, and that will be probably the solution for this challenge.
Sorry to interrupt you, but could you tell me how far are we from solving the scalability problem? Could you make that guess? Or do you think it's a matter of 1 year, 2 years, or 10 years?
There are already solutions out there that are being used in public blockchains.
So you think like big adoption, it would be possible like right now or very soon?
Yeah. I think it will. It's not a challenge for our projects right now because we are not expecting millions of transactions per second, but for sure in the stock market it will be something that we have go over. And also we can find some challenges in standardization and interoperability. This is also very important because, well, first, I don't think there will be only one blockchain for everything. There will be multiple blockchains, and they will have to communicate between each other, but not only between blockchains, but also with the legacy systems. So if today I build anything, it will have to interact with the rest of the systems at BME, and also with the external world. So there are already also developments around this area, and so we have for the interoperability with the external world, we have blockchain oracles and that are being developed. And then interoperability between blockchains, we have projects like Polkadot or Cosmos that let us communicate blockchains in a secure and safe way. So
you say that scalability is something that is somehow being solved. Interoperability is something that is somehow being solved.
But
and standardization?
But interoperability, I think that is farther away than
scalability.
Yeah.
Okay.
Yes.
And then you talked about standardization. With me coming from accounting, is something that we've been having like for hundreds of years, and we have not been able to standardize or to homogenize. So I'm very skeptical on that side, that we can get together and agree on common standards or things like that. So how you see that working? Think we're doing well?
Well, there are working groups that I think will help with the standardization. We have the Ethereum Foundation, probably can tell us about the Stellar Foundation. They are all working together to try to work in token standards and other type of standards in blockchain, and I think that will help.
Okay. If you want to step, guys, in any of the questions I asked, particularly, just feel free to step.
I was just going to say, I was going to repeat the one that Candace said, regulatory clarity, and that's probably the hardest challenge in our projects. As you can imagine, the laws and regulation that we have today are based on centralized systems. So we have to work, in every project, we have to work very closely with regulators to educate them, and also to go this journey along with them. So that's probably the one that we are spending more time in every project in regulation.
In regulation.
Yeah.
I like this question. Sorry about that. It's for both Scott and Alvaro. It's from the audience, and they say, are those projects high priority or just nice to have things, in your companies? So in your companies, within your companies, those projects are high priorities or just are things nice to have?
Yeah, I mean, I can go first. Yeah, I think they're definitely high priority. We definitely, as a DLT team, we have goals which are, to drive these applications to production. And there are definite kind of deliverables on those. So I think they are high priority. There's also, obviously, you have to consider as well when you try to then integrate those solutions within the bank as well, because we work in innovation departments, and that is also a challenge to try and get this on the agenda of the right kind of areas of the bank as well. So you have to also be able to not just be a high priority in terms of innovation, but also be a high priority in terms of the relevant department. So that can be more difficult, because obviously every department has their own backlog, has their own things to work on. But generally, yes, we do see those projects as high priority, because we have real key deliverables and key goals to drive more initiatives to production. Yeah,
that's great. And Alvaro, I believe that you're going to say the same.
I'm going to say that they are high priority for me and my team.
Which is not the same, Alvaro.
Which is not the same, obviously. But they as Scott said, we have an innovation lab. But if you want an innovation lab to be successful, you need to have timelines, deliverables, and we have them. And you need also a business case behind it. Otherwise, you will build it and you will throw it away.
Yeah.
So that's our approach. Obviously, in our company, our project is not the core business, so there are other priorities as well. But they are important projects, and they are dedicating resources and time and people.
Okay. So we have 8 minutes, and also I'm going to have straight my priorities, and my priorities are the audience questions. I'm keeping on them, and this is for Candace. Any extra detail you can share about CBDC? I haven't heard this one. Is Inrina? I don't know what that is. How you say? Yeah. Like Ukraine. Or any other? I suppose any other CBDC or any other co-op at the bank.
Sure. So I think the Ukraine, for those who don't know, so the Stellar Development Foundation entered into an MOU with the Ministry of Digital Transformation in the Ukraine to help them to study the issuance of a CBDC, a fiat-backed token on the a CBDC. Sorry, there are other projects with respect to banks and anchors, which are more in the stablecoin category. So I think one important thing to say about the Ukraine is that we are certainly actively engaged in helping them. There was some press that kind of ran with that news and made it sound like the Ukrainian central bank has decided to issue a CBDC on the Stellar network, which is not the case. They are very interested in learning. They are very familiar with the Stellar network. They were familiar with the Stellar network before we engaged with them, which is what we always love to see, that whether it's a business or a bank or anyone who has found the network and is starting to build. That's the beauty of being this open source project and available to everyone. So, and I think, some of the issues that Alvaro mentioned about interoperability are very front and center whenever we're talking about CBDCs, because we think that is one of the most critical pieces. There's so many different countries and central banks that are looking at CBDCs, and they're at various different stages of their understanding and development and possibly even piloting things. But the key is, as Alvaro said, there is not one blockchain that is going to win and be all things to all. And we think that the interoperability is critical, and that those questions have to be addressed early on. So those are the types of things that, when we're talking in the CBDC realm, that we focus on, is making sure that folks are building and thinking in a way that that interoperability, because interoperability is a key part of how things are working right now with our anchor network, right? The connection between the blockchain network and the traditional rails, regardless of what country you're in and which rails those are, that has to happen, because otherwise we're going to create the same problems that we have in the current traditional financial systems, where the rails are not super interoperable. So so that's sort of a high level on kind of what we do and think about in the CBDC world.
So the same question I asked, I know this is a difficult question, but we've heard a lot about CBDCs and how central banks are, all of them, analyzing the issues of them, and you have been close to it. Could you give us, how do you see that happening? When do you see that happen? Do you see it like something happening in 1 year, 2 years, 5 years? Your own personal guess, or
yes,
you don't
that's
dare?
A very I'm not big on speculation given my background, but I think we see that there are smaller countries in the Caribbean, for example, who are already piloting and working on this. So I think that it's really going to depend a lot on the country, right? Obviously, China has their own process that seems well ahead of everyone else's, and maybe they're not dealing with some of the issues that
we're dealing.
God has mentioned in terms of privacy and things that we value in some other parts of the world. So I think that it's a little bit of a race, and I do think that there will be. My guess is that there will be smaller nations that it's easier for them to manage and to try and then some of the folks will learn lessons from how they roll it out.
And the Bahamas is because they needed it. They didn't have the support, so maybe these are the situations that will start, like the small cases, and then spread to the big ones. It could be. And then heading this last minutes, I don't know if we're going to have time for more questions. Is for Scott, which is, do you focus in a specific ZKP protocol? I don't know how you say it, but that's very technical, I think. Are you more focused on token balances like Zcash or Aztec, or more generalized SNARK circuits? This is a very specific question.
Yeah.
You understand that, so explain it to
question.
us. I don't understand it.
So it's a question of how what we use to develop the solution at a protocol level. I can answer that by saying we do work at a circuit level. So this isn't going to be interesting for everyone, but we work with Zinc, which is a product by Matter Labs. And for this question, if you want to find out more, you can also, we've got a page up at the moment as well, which is zkflow.io. So you can go there as well to find more details on that.
Okay, that you didn't want to bore us then. Thank you very much, Scott. You would not have. So I don't know if you want to just the title of this is the future of finance, the future of finance and digital assets and beyond. I don't know if you want to wrap up like half minute and see how do you see the future of finance, so what are the benefits, or what are the let's say the changes that you wish maybe, or you see that are going to come for finance in general? I don't know who wants to start. Maybe Alvaro, Scott, and Kenneth, maybe in that order. I don't know. Just first. To wrap it up.
And it's an exciting ecosystem, digital assets and finance. I expect many changes in the next few years from decentralized finance and how they are going to be integrated with the traditional finance as well. And also I would like to see finance going to, as Candace said, to people who cannot have, who don't have access to finance today. And so that's what I would like to see.
What calls my attention is that you will see decentralized and traditional coming together, not against each other, but somehow integrating.
No, I think it's inevitable.
Yes, me too. Yeah, we agree on that. Thank you, Scott. What would you say to finish?
Yeah, I think to keep it short, for me, I think what I'm really looking forward to seeing is the new asset groups that we see that come as a result of this. So the new kind of tokenized asset areas that we might not have seen before, and we might not have seen finance involved in before. So yeah, that's what I'm really looking forward to seeing in the area.
And finally,
I agree that with Alvaro that I think that the blockchain and traditional systems, I look forward to seeing them working seamlessly together and solving a lot of these issues that we've talked about in terms of inclusion in a way that the blockchain is for the really smart people who understand it, and the solution is easy for everybody to manage and safe, obviously.
Well, we are constructing, after this, I always get so satisfied of a new world, a better world. Then you just put on the TV and hear the news and you just come back to reality, unfortunately. So, hello, Victoria. We are done.